And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is the 31st of December 2023. This is gonna be the last weekly review this year. I really had fun filming those weekly reviews this year, and I'm really looking forward for the upcoming year where I'm gonna be bringing many things to the table. Let's start now with the weekly review. Starting with the DXY, go to the monthly chart. I'm gonna be sharing my outlook of what I'm expecting next year. As you can see, we have relative equal lows here. This low and these lows, relative equal lows. We have a fair value gap below the sell side liquidity. You can see that price has failed to take out this high, but if you compare DXY to the yields, you will see that DXY has taken the buy side liquidity here with the yields, and also the prices, the treasury prices has took the sell side liquidity because DXY treasury prices are inversely correlated. So price has created a high and the treasury prices has created a low. Price has created a high here, so it has created a low and a lower low, but DXY has failed to take out this high. Also the yields has created a higher high and started breaking lower. So on DXY it's going to be forming bearish mitigation block, whereas on yields and prices it's going to be forming bearish breaker. On the yields, on the prices is going to be forming a bullish breaker. But if you look closer here, we have a bearish potential bearish mitigation block here. It's forming at the moment. This is the mitigation block, these two consecutive down close candles. But if you look closer, that there is also going to be here a bearish breaker, because we have a high, low, higher high, took the buy side liquidity and it reached to the fair value gap. Now it's breaking lower. So these two consecutive down close candles are really important because they are playing two roles of BD arrays. The bearish mitigation block of this high, because it has a failed higher, lower high, failed high. It didn't take out this high. And we also have a bearish breaker because price has swept the sell side liquidity here, cleared the sell stops that were residing below these lows, and then cleared out the buy stops that were residing above this high, and reached and accumulated some positions in the fair value gap and then broke lower. So this would be like considered a turtle stop entry. I'm expecting price to break down lower, reach to the low, and then how far below this low can it reach to? We have the fair value gap between this candle's high and this candle's low. There's a fair value gap. I'm looking at this as a drawn liquidity. After we break down lower than to this level by early next year, I'm expecting some kind of quarterly shift to occur in price. We're going to be rallying up for about 2 to 3 months, reaching up to the bearish breaker, accumulating positions at the bearish breaker, and the rest of the year in symmetry with the seasonal tendencies, we're going to be seeing lower prices that attacks these lows right there. That's what I'm expecting regarding the monthly time frame, and this is going to be the outlook for next year. Going to the, and if I mention that if the yearly outlook that I've mentioned here on the XY, everything is going to be diametrically opposed on Euro USD and Pound USD. So if you go to your Euro USD charts or the monthly chart, you see the same thing here, but price has formed equal highs. The same thing is mentioned for Pound USD. Going to weekly time frame, as you can see, price has worked inside this fair value gap, the drawn liquidity that has been calling out for some time now. As I have mentioned on the monthly, I'm expecting price to just continue drawing lower toward this sell side liquidity, and at that level we have a fair value gap. If you go back to your charts, you see that there's a fair value gap. I've extended it in the future. Price can retrace Now you can see that there's an immediate rebalance. This candle's low, this candle's high. Everything is efficient. There's just this weekly fair value gap. Next week, if we close above the weekly consequent, this level right there, I'm expecting price to perhaps work inside the weekly fair value gap before we trade lower. But preferably, I want to see price remain lower and the weekly consequent just show some resistance to price that can send price lower. And obviously, I want to see price close below the consequent of this discount wick that can potentially send price lower to this sell-side liquidity and this sell-side liquidity. Going to the daily time frame, the same thing is mentioned here. You can see that there's a fair value gap here just below the weekly consequent, and you can see that we have closed below the weekly fair value gap drawn liquidity. From the weekly time frame chart, this fair value gap that I've been calling for, we've closed below it. So now we're trading basically at the consequent of that fair value gap. Price, preferably I don't want to see price close above that fair value gap, so it can wick to that fair value gap, it can wick to the weekly consequent, but preferably I don't want to see it close above that weekly fair value gap. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we're closely reaching towards this buy side liquidity and potentially eventually to that buy side liquidity. So I'm still expecting higher prices. You can see that as we're approaching the holiday season, price has just not been moving with a great magnitude in price and speed, but that's going to be resuming later on by next month. So as I mentioned, I'm looking for higher prices, this buy side liquidity, this buy side liquidity. Although price can retrace and work inside this fair value gap, the daily time frame, you can see how we closed above that premium wick consequent. This from this candle, I've mentioned if we close above it, we'll be reaching to this buy side liquidity and potentially to that buy side liquidity right there. And if we close below it, potentially that's going to take this sell side liquidity of this candle's wick, this candle's low, and work inside the weekly fair value gap. You can see that price never reached to the discount wick since we opened here, excuse me, because Monday there's no Monday trading because on Monday there was a holiday. It was Christmas, so there was no trading on Monday. Neither there is trading on tomorrow Monday, because tomorrow Monday is going to be New Year Eve and there's not going to be trading at that time. So there's no Monday here. That's Tuesday, Wednesday, Thursday, Friday. On Tuesday, price closed above it and just continued running up here. Friday has created a reversal, trading lower. So right now, as I've mentioned, I'm looking for higher prices, but price can consolidate at this area, can create some kind of interest for people, for retail to actually short this, because they're going to be looking at this as an old resistance and they want to short it. So it would be beneficial for smart or the algorithm to hold the price in this area, so retail can actually short this area, expecting that price is going to be respecting that as a resistance, and price can actually break down lower to make them believe that they are on the right side, just to take out the liquidity below the sell stops and then run up higher to take the buy side liquidity and reach to that buy side liquidity. So that's what I'm thinking about ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see that we're working inside the fair value gap, which is the drawn liquidity I've mentioned earlier, last few weeks ago. This rejection block, for the people who are going to be coming to me and telling me, oh, the rejection block has to be the highest close or opening. If you go to your monthly charts, this is going to be answering your question. So we have rejection block that's going to be looked at as means of drawn liquidity, and we have the buy side liquidity. This is what I'm looking for. We have a monthly fair value gap, and just below it we have this is a weekly fair value gap, and just below it we have the monthly inversion fair value gap. So this level can be treated as support if we trade below it. So, and we have the monthly breaker high. So at this area we can see some kind of breakaway gap forming, or this can be mentioned as measuring gap, because if you measure from this low to this high, you may see some kind of an symmetry move or projection to the upside. Going to the daily time frame, as I mentioned, we might see some kind of potential consolidation at this area because we're entering into holiday season. It's likely that we're going to be seeing low volume, which leads to, as a result, a consolidation in the marketplace. So although there can be a consolidation, but I'm still looking for high prices. I believe that we're going to be running the all-time high here pretty much on all the indices, ES, NQ, and Dow. I think we're going to be running all the all-time high. Going to Dow, as you can see, this is the all-time high. We're slowly approaching it. We're very close to it. There's a weekly fair value gap here that I've mentioned earlier on. Premium weight constant encroachment from last week's premium weight constant encroachment and discount weight constant encroachment. We never traded to the discount wick, we traded to the premium wick. You can see that this candle, after it closed above it, next candle traded lower, made it rebalance, and then traded higher to count this buy side liquidity. So as I mentioned earlier, when I'm mentioning something about how price is going to be moving, it's pretty much algorithmic. So it's scripted. When it does one thing, I'll be able to anticipate and expect what price is going to be doing the next. And this is what I'm trying to share here in the weekly reviews, where I'm going to be showing and sharing with you what I'm going to be expecting from price if it does this specific thing. So I think that's going to be also pretty much it for Dow. As I've mentioned earlier, looking for all-time high on all the indices. We're close to it, so it's going to be worthwhile looking at this and price running it up. Going to Euro USD, also known as the fiber. This is the weekly time frame chart. You can see that we ran the buy side liquidity that I've mentioned. We formed an immediate rebalance last week, so we opened, traded lower to the high of this candle's high, and then we traded up higher, attacked the buy side liquidity, reached to the volume imbalance low, and then retraced lower. Now, what I'm expecting next week, it's important to measure the constant encroachment of this premium wick and look how price is going to be trading at it. If we close above it, this is likely a sign that the price is going to be continuing trading up higher, running this buy side liquidity and this buy side liquidity. Going to the daily time frame, you can see how price, it's pretty much everything is balanced here. Also, if you go to the weekly time frame, you can see that everything is balanced out. There's no fair value gaps. There's this low, but it's very far from actually reaching to the buy side liquidity. But there's actually nothing inefficient. Everything is balanced out. On the daily time frame, you can see that there's a small fair value gap right there. Price can retrace lower, which is also a bullish order block. Price can trade to it, fill this fair value gap, and then run up higher. Anything below that, it's not gonna tell me that we're in a high probability that we're gonna be running this buy side liquidity. I'm looking to see price run up this buy side liquidity early next year. So by January, February time period, I'm wanting to see price run up this buy side liquidity. Also, you can see that we have a buy side liquidity here, and inside the buy side liquidity, it's pretty much relative equal highs, and inside those relative equal highs we have a fair value gap. So I'm aiming at these levels because we also formed another high here. So now we have relative equal highs here. Retail are thinking that this is resistance, they can short here. Buy stops are being built above these highs, so I'm wanting to see price trade up higher and attack this buy side liquidity. That's going to be pretty much it for Euro USD. Going to Pound USD, also known as the cable. This is the weekly time frame. You can see how price has pretty much traded up higher. On the daily time frame, it has closed above the premium constant encroachment and has formed a high that is equal to that high. On Thursday, price has attacked this buy side liquidity and then retraced, and on Friday it also was pretty much indecisive. If price now want to retrace, I want to see it being supported by the constant encroachment of the discount wick right there, and that can potentially send price up higher to attack this buy side liquidity that has just formed and reach to that buy side liquidity. So I'm still looking for higher prices. You can see that on the daily time frame, nothing is inefficient. So everything is balanced out. There's no fair value gaps. We have just these lows, and price has run these lows, attacked them into the bullish order block, and then traded up higher, took the buy side liquidity. So I'm expecting some continuation to the upside. I think that's going to be pretty much it for the review of this weekly review. I want to just add some general notes that next year I'm going to be live streaming 3 case studies every month. It's going to be 1 NFP, 2 CPI, 3 FOMC interest rates announcements. So you can expect 3 live stream liquidity study cases every month on monthly basis. So every month there's going to be 3 live streams. Also, expect from me on every month I'm going to be reviewing gold, Bitcoin, and crude oil. So I'm going to be covering crude oil, gold, and Bitcoin every beginning of a month. So next week I'm going to be reviewing crude oil, gold, and Bitcoin. It's going to be on monthly basis because it's pretty much not my main focus or the markets that I'm trading, but it doesn't matter if you're not trading these markets. You have to look at them, and you have to have some kind of study of how all the markets are trading and how they're behaving, so you can get a better idea of how you want to trade your own asset classes that you're trading. So I'm going to be covering gold, Bitcoin, and crude oil to see how it's behaving with the asset classes that I'm trading. Also, there's going to be 1 teaching a week where I'm going to be bringing a mistake that I did when I'm developing as a trader. I'm going to be covering topics on trading, topics on how to decide your draw liquidity, topic on how to backtest, how do I backtest, topics pretty much covering everything about trading, psychology, tips and tricks, the mistakes that I did when I was developing as a trader, and how can you avoid them to become a better developed trader. So I think that's going to be pretty much it. I'm really excited for the next year. I really think that I have a lot of things to share with everyone, and I really wish that you guys would find this insightful and helpful to you. Until I talk to you next time, be safe. Wassalamu alaikum warahmatullahi ta'ala wabarakatuh.